Imagine you're standing in front of the bustling stock market, surrounded by the sound of chattering traders and the flashing lights of screens displaying various stock prices. You look around and see people frantically moving around, their faces full of anxiety and panic as they try to make a quick buck. Suddenly, you realize that this isn't a game of chance or luck. It's a complex and intricate world of finance that requires more than just a roll of the dice. As you delve deeper into the world of stock trading, you begin to realize that it's not just about buying and selling shares. It's about having the knowledge, skills, and perseverance to make smart decisions that will yield long-term success. It's about consistency, commitment, and having a clear vision of your goals, and avoiding the pitfalls of self-sabotage. But what separates stock trading from gambling? The answer lies in the comparison between brain surgery and taking a knife to someone's head. Sure, both may seem risky and dangerous, but for the trained and skilled expert, it's a matter of surgical precision. Stock trading is no different. It requires a deep understanding of market trends, company analysis, and risk management. Join us on a journey through the world of stock trading, where we'll explore the intricacies of finance and show you that success in the stock market is not a matter of chance or luck, but a result of hard work, dedication, and expertise. Chapter 1. Once upon a time, there was a young woman named Sarah who had just inherited some money from her grandmother. She was excited to invest it in the stock market, but she didn't know where to start. She had heard the phrase, buy low, sell high, before, but she didn't really understand what it meant. So she did some research and learned about the financial crisis of 2008. She read about companies like Citigroup, Lehman Brothers, General Motors, and AIG that had all seen their stock prices plummet during that time. She realized that just because a company had a big name didn't mean it was a good investment. Sarah knew she needed to focus on earnings, but she wasn't sure how to do that. Then she heard about the cockroach effect. She lived in New York City, so she knew all about how once you see one cockroach, there are bound to be others. But she had never thought about how that principle could apply to the stock market. She learned that when a company's quarterly earnings are unexpectedly great, it usually means there's more good news to come. And if a breakout company seems to be on the upswing, it might mean you should pay attention to that industry as a whole. Sarah realized that focusing on earnings wasn't just about looking at a company's past performance. It was also about paying attention to trends and industry news. She started following some financial blogs and news outlets to keep up with the latest information. But Sarah also learned that not all surprises are good ones. Companies that fail to meet their earnings expectations often continue to disappoint in the next cycle. So she knew she needed to be careful and focus on companies that had positive signs of growth. Despite all of her research, Sarah was still hesitant to invest her money. She was worried about losing it all. But then she remembered something her grandmother used to say, "Nothing ventured, nothing gained." So Sarah took a deep breath and invested her money in a few companies that had exceeded their earnings expectations in the last few quarters. And over time, she saw her investments grow. She realized that focusing on earnings had been the right strategy all along. Sarah learned that investing in the stock market wasn't just about buying and selling stocks. It was about doing your research, paying attention to trends, and taking calculated risks. And most importantly, it was about being patient and sticking to a strategy that focused on earnings. Chapter 2. The world of investing can be a thrilling adventure, filled with twists and turns at every corner. It's a world where the stakes are high, and the risks can be daunting, but if you know what you're doing, the rewards can be tremendous. Take the case of John, a young man with a passion for investing. John had always been fascinated by the stock market, but he had never really known where to start. Then, one day, he stumbled upon an article that talked about the importance of focusing on earnings when investing in stocks. The article made sense to John, and he began to do his research. He spent hours poring over financial statements and market reports, trying to find companies that had exceeded their earnings expectations in the past few quarters. He found a handful of stocks that fit the bill, and he decided to invest in them. As the months passed, John watched as his portfolio grew. He was thrilled with his success and continued to make wise investments. But he soon realized that he was doing something different from the professionals. He wasn't following the herd, he was charting his own course. John continued to invest in smaller, nimbler companies that had relatively smaller numbers of shares. He didn't have a committee to answer to or a board to please, so he was free to take risks and leverage shifts in the market. And it paid off. Soon, John's success caught the attention of his friends and family. They wanted to know how he was doing it, and he happily shared his strategy with them. He urged them to focus on earnings, avoid the big-name stocks, and trade like an amateur. And so, John's passion for investing turned into a mission to educate others. He started a blog where he shared his insights and advice. He spoke at local investment clubs and even appeared on a few financial news shows. John had discovered a truth that many professionals in the investment world often overlook: the amateur investor has many built-in advantages. By focusing on earnings and avoiding the conventional wisdom, John had unlocked the secrets to successful investing. The world of investing may be a risky one, but with the right mindset and approach, it can also be incredibly rewarding. So, if you're thinking about investing, remember John's advice: focus on earnings, trade like an amateur, and don't let the professionals intimidate you. Chapter 3. The Principles of Specific Entry Point Analysis, SEPA, fascinated a young investor named Alice. She was always on the lookout for ways to improve her investments and maximize her profits. One day, she stumbled upon Mark Minervini's SEPA strategy and was immediately intrigued. As she delved deeper into the strategy, Alice learned that SEPA was designed to identify companies with potential star power by analyzing their growth in revenues, margins, and earnings. But it didn't just focus on a stock's value, it also looked at how quickly the stock was rising and what led to its growth. Alice was fascinated by the idea of finding youthful companies within the first decade following their initial public offering, IPO, that had strong signs of growth and demand, even if they had little brand recognition. She realized that most investors were scared of companies whose names they didn't already know, but this was the antithesis of what she wanted to be doing if she was looking for the next superstar stock. The most crucial aspect of SEPA, Alice learned, was timing her entry and exit points. If she fumbled the timing, she could stand to suffer huge losses if the stock plummeted. On the other hand, if she got it right, she could make a significant profit. Alice was determined to put SEPA to the test. She spent countless hours analyzing stocks, looking for companies with potential star power. Finally, she found a company that met all the criteria: a relatively unknown tech company that was on the cusp of a major breakthrough. Alice carefully timed her entry point, investing a significant amount of money at a lower risk price point. As she watched the stock rise at breakneck speed, Alice knew that she had made the right decision. She continued to monitor the stock's performance, using SEPA's principles to time her exit point. Finally, the stock reached its peak, and Alice decided it was time to sell. She had made a significant profit, thanks to SEPA's principles of specific entry and exit points. Alice was thrilled with her success and knew that she would continue to use SEPA in all her future investments. Chapter 4. Lila had always been intrigued by the stock market. She would read articles, watch videos, and listen to podcasts to learn more about it. She had a knack for numbers, but she was always held back by her fear of failure. Lila thought the stock market was only for the wealthy and the educated. She believed that she was not smart enough or rich enough to invest in the stock market. One day, Lila stumbled upon an article that caught her attention. It said, "The thing holding you back is not the market, it's you." These words stuck with her, and she realized that she was the only one who could overcome her fear of failure. She decided to take a leap of faith and invest in the stock market. Lila started doing her research, and she found out about Jesse Livermore, a pioneer trader who succeeded during the stock market crash of the 1920s. Livermore's words, "Wall Street never changes, because human nature never changes," inspired Lila to believe that success was possible, regardless of the circumstances. As Lila continued her research, she came across a strategy called SEPA, which was developed after decades of on-the-ground failure, success, and experimentation. Lila decided to give it a try, and she started investing in companies that showed signs of superstar potential. She did not focus too much on the price-earnings (PE) ratio but used it as a guide. She did not let it stop her from doing her own research and making her own calls. Lila also learned an important lesson: do not invest based on what's on sale. Instead of looking for a red ticket item, invest your time and money in the companies that show signs of superstar potential. You usually get what you pay for. Lila continued to invest in the stock market, and she started to see some success. She invested in companies that showed signs of growth and potential, and she did not let her fear hold her back. She learned to trust herself and her instincts. Lila realized that the stock market was not only for the wealthy and the educated. Anyone could invest in the stock market and succeed, as long as they were willing to put in the time and effort. As Henry Ford said, "There isn't a person anywhere who isn't capable of doing more than he thinks he can." Lila's story is a testament to the fact that the thing holding you back is not the market, it's you. If you have what it takes to score big on the stock market, you should believe in yourself and take the leap of faith. With dedication, belief, and attention, you can overcome your fear of failure and achieve success in the stock market. Summary: as a young investor, Max was eager to learn how to make wise investment decisions. He had heard about the specific entry point analysis methodology, which promised to help him maximize rewards while minimizing risks. Max knew he had to do his own research to identify the next big thing and not follow the crowd. Max delved into the methodology and discovered its 3 principles. The first principle emphasized that there are right and wrong times to purchase stocks. Max learned that he needed to identify the perfect moment to invest. The second principle taught Max how to identify superstar stocks before they hit a meteoric rise in price. Max was thrilled to learn that he could spot the next big thing before it even hit the market. The third principle of the methodology promised Max that he could make a small fortune by wisely investing in such stocks. Max knew that he had to keep his emotions in check and focus on making sound investment decisions. Max put his newfound knowledge to the test and started investing in stocks. He had some ups and downs, but he never lost sight of the 3 principles of the methodology. He kept researching and analyzing stocks, and soon he discovered a stock that he believed would be the next superstar. Max invested all his savings in the stock and waited patiently. Days turned into weeks, and weeks turned into months. Max felt anxious as he watched the stock's price fluctuate, but he stayed true to the methodology. Then one day, Max received a notification on his phone. The stock he had invested in had hit a meteoric rise in price. Max had made a fortune. Max's success story spread, and many young investors started following his footsteps. Max realized that success doesn't come to those who follow the crowd. You have to do your own research to identify the next big thing. Max knew that records are designed to be broken, and he was eager to discover the next superstar stock. In conclusion, the specific entry point analysis methodology is a valuable tool for young investors like Max. The methodology emphasizes that success comes to those who believe in themselves and are willing to do the hard work. Max's thrilling success story is a testament to the methodology's effectiveness, and it inspires young investors to break through the barricades of their own imaginations and sense of possibility. Finally, the insights and knowledge I gained from reading Trade Like a Stock Market Wizard were phenomenal. I highly recommend it. Thank you for taking the time to watch, and if you found value in this video, be sure to hit that like button and subscribe to my channel for more great content. Trust me, you won't regret it.